You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again to check in on the world of futures options. Yes, it is time for TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Remember, you guys can follow along with all the reports we're talking about here on the show. cmegroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those are the places to go to get these reports. You want to check Rough Rice at 2 a.m. on a Tuesday? No one's going to judge you. They're live all the time, and you can't beat the price. It's all free, and of course, it'll help if you're at all remotely interested in these markets and you're listening to a show like this. So you probably are. You owe it to yourself to check out those reports, see what's going on in your favorite products, from a vol, from a skew, from an OI, from everything else going on out there, perspective, the hot trades, all that good stuff, and a whole bunch more. And let's see who's joining us on the program today. I'm pleased to be joined once again in both the CME and FTSE hot seats, doing double duty this week. We got Mr. Todd Colvin, the Senior Vice President at AMBROSINO Brothers. Todd, welcome back to the TWIFO program, sir.
Mark, how are you doing? Thanks for having me back on. Pretty excited to be here. Lots gone on since that set meeting last week, and we get to take a look at maybe where some of the weak links are with some of the moves in volatility.
Yeah, I feel bad. We're dragging you in here on a day when all the rates markets are closed. This is your day off, sir, and you're joining us.
Never a drag, Mark. Never a drag.
I was always jealous of you rates guys when I was trading on the CBOE, because we never got the days off, and you guys got everything. You know, any remote holiday, all the rates guys were off, but not us. But
we follow the protocols of the Bond Market Association, so can't blame us.
Yes, can't blame you guys for having an awesome holiday schedule. As we keep on rolling, it is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers. This is indeed the portion of the program where we break down what the heck is moving and indeed shaking out there at CME to the upside, aka the light side, and indeed to the dark side. And Todd, as our guest, you get pride of place. Where should we begin our journey this week, sir?
Let's start on the upside, Mark.
All right, let's do it. To the upside we go. And again, you can find this report for you. This is one of the few you can't find at that /TWIFO link, listeners. But luckily, if you follow us or if you follow CME on Twitter, we share it right before showtime so you can get access to it there. Otherwise, you need the premium version of the tools to get access. So an extra little bonus for you folks out there. If you looked at it, you'd see that it's pretty evenly split week overall, even though there are some larger movers. There's more large movers to the upside than there are to the downside. But net, red and green, it is pretty much 50-50 this week. But to the upside we go. First off, gold, number 5, up 3.81% out there. Pretty active week for gold. Over 250,000 contracts on the tape already. So maybe we'll hang our hats out there this week. Number 4, a lot of ags on the light side this week. Number 4, we've got rough rice up 4.29%. It was number 3 in the other direction last week at off about about 2.3%. And again, before you get all excited, I know some of you have written in recently about rough rice. It's not really an options stalwart. It has 279 contracts on the tape right now. So probably not heading out to rough rice, but crazier things have happened. Number 3, SRW wheat up nearly 5%, 4.98%. That's got about $1.55 on the tape. So some decent paper out there. Outpaced, though, by its rival, KC wheat, up 4.99%. So 0.01 higher this week. That has about 19,000. You know the old song and dance of the KC versus Chicago wheat. Which one is more active? Clearly, you can see it out there for yourself today. And number 1 to the light side this week, good old Bitcoin, even if it is easing off some of those highs recently, 6.5% to the upside. And again, before you get all fired up, a whopping 170 contracts on the tape out there. That's a decent number, actually, given some weeks we could have 25. But still, it's not going to rival some of these other big players we're talking about here. Now, to the dark side we go. Number 5 to the dark side. Also, some ags and softs and other things in our dark side here this week. We've got lean hogs off 2.76%. And again, a pretty active week, 28,000 contracts on the tape. That's nothing to sneeze at for the hogs out there. Number 4, iron ore off 3.64%. It was number 1 in this direction last week, off 18.53%. Again, you know the deal. No real options volume to dive into out there. Number 3, also not a big options player. It's lumber, back in our movers and shakers. It's been a little bit of a quiet period for lumber, but now it's back, off 4.16%. We looked it up before showtime, a whopping 13 contracts on the tape for lumber listeners, so probably not heading out there this week. Number 2, Eurodollars off 6.56%. And number 1, with a pretty sizable bullet this week to the dark side, NATGAS off 12.65%. Todd, we have an interesting week here. We kind of have a little bit of a taste of everything on our movers and shakers. We've got metals, we got ags, we got rates, we've got even some livestock, some energy. So it's kind of a bit of a pick your poison. Where should we begin our journey this week, sir?
Well, why don't we start with the metals?
Metals. I think we can do that, sir. So let's head on out to the metals first.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
That drop always brings a smile to my face. Werewolves beware. It's ridiculous, which is part of the fun, listeners. But let's head on out there. You guys know where to go to find these for yourselves. CMEgroup.com/TWIFO. Then go out to that drop down for the asset classes. You're going to scroll all the way down to the bottom there for metals, and then get on into the second category, product family. You're going to see precious metals at the top there. Go to that, and then pull up gold. You'll see, as I said, a pretty active week out there, 263,000 contracts on the tape. And net just this week, gold up about 2.66%. So a decent week for gold. Of course, if you extend that all the way back to last week's show, that's up nearly 4%. Coming into showtimes at about almost an 1865 out there. So a little bit of resurgence in gold. You know, Todd, gold and the metals in general have been an interesting story of late because Obviously, inflation's a big deal now, and the concerns over the economy and rates and everything. So gold very much a factor in that story. Is it underperforming? Is it not really living up to expectations? What are your thoughts on gold, and what's lighting up the tape over there at Ambrosino Brothers this week from a metals perspective, sir?
Well, when you talk about gold, you have to look at its three biggest obstacles, and that's the dollar, treasury yields, and of course its newer cousin Bitcoin that have sort of been stealing the allure. So when you look at higher yields and higher dollar, you think, well, gold's going to go lower. When you think higher Bitcoin, you think gold's going to go lower. That hasn't been the case here. And it's one of the reasons why we're seeing a bit of volatility. It's not doing what it's supposed to historically, right? So given the fact that the Fed's involved talking about higher rates, that should be taking away from gold. It's not. There's something underneath here that's giving gold a little bit of a bid, maybe some reaching for some calls. I think at this point, that's one of the reasons why gold volatility is up, because it's not doing what it's supposed to be doing.
Well, let's get to that volatility out there, because metals vol, listeners, particularly gold, always a bit of a weird beast. It can kind of hang out in one area for a while. Then it can have a nice rally, a nice pop, and then it comes right back down to the level it's been hanging out at again for quite some time. So metals vol, particularly, like I said, gold, always been a bit of a weird beast. Bitcoin's starting to adopt some of that volatility nature a little bit as well. I mentioned that on the Crypto Rundown program. So metals vol, always an interesting beast. What is that vol, you may ask? Well, let's see. Coming into showtime, we're at about a 14 out there in the DEES contract, which was the most active contract. It did about a third of the paper this week. It has about 12 days ago, so it's slightly inside our 2-week cutoff period, but we'll make an exception here today. Again, about a 14. It's up about 2/3 of a point, so a decent little resurgence in vol here for the metals. Let's go on out to the skew here in DEES. Last week, the puts were about 0.6% rich to the at the money. This week, they've come in only about 0.1%. So the puts are pretty much flat to the at the money. That's why I like talking about gold sometimes. The skew is always evolving out there. Last week, the calls had a little bit of a bid, 1.6% rich to the at the money. This week, they've more than doubled that. They're about 3.4% rich. So a little bit of a bid to the calls. Usually we see a more pronounced bid to the calls out there in gold. 3.4% is not exactly that rich. If you go a little bit farther out, you go to March or April of next year, you're seeing 7 to 8% bids. And you go out beyond that, you go to, let's say, July of next year, you're seeing 14 and 20%. So 3% is not really much of a bid for the upside in gold, listeners. But let's dive into the DEES contract, see what the most active, again, I said over 250,000 contracts on the tape this week. So a pretty active week for gold. And of that action, what was the most active? I said we're at about an 1865 coming into showtime. It was the 18.5 calls in December, doing about 12,000 contracts almost exactly. The big day was actually Wednesday, 9,400 going up on Wednesday. The rest kind of scattered throughout the week. Most of that closing on Wednesday. So some folks giving up on the 18.5 strike out there, maybe taking off some gains. We are again through that strike now. Either way, a lot of closing paper on the 18.5 strike on Wednesday. Let's see. Following hot on its heels behind that, we have to go out to January of next year to the 1,900 calls. About 11,000 of those on the tape. The big day today, almost 6,000. 2,500 yesterday, 2,000 on Monday, a handful on Tuesday. It's been mostly opening throughout the week. Obviously, we don't know the numbers for today, so maybe some opening upside paper in January. We are not that far away from the 1,900 strike, closer now than we were this time last week, obviously. So perhaps some opening paper at the next large psychological strike would make some sense out here in the land of the metals. Let's see. Right behind that, we saw the 1975s also in January. So if you thought 1,900 wasn't optimistic enough for your blood there, 1975 is doing about almost 10,000 contracts. Again, almost all of that today, 9,300. So perhaps some verticals afoot out there today. It is interesting that both of these strikes would be lighting it up today and really not trading much the rest of the week. But that's what we're seeing out here in all things gold. Let's scroll a little bit farther out. You know me, listeners. Whenever we're talking the precious stuff, I like to go a little bit farther out to see what kind of crazy upside we're seeing out here in gold. There's always a crazy fly or a crazy vertical or something lighting up the tape out there in the metals. And this week looks like it's the 21 halves in, what is this? This is June of next year, going up 3,000 times this week, pretty much opening, followed by, it looks like, 21 halves, Also saw the 20 halves going up 1,200 times the same day. Both of these on Wednesday, also opening. And the 2200s also going up about 500 times. Also on Wednesday, also opening. Could be unrelated paper. They are interesting strikes, to put it mildly. You could just see someone swinging for the fences with the 22 halves or doing a weird ratio vertical. It's not quite 1x2. It's almost closer to 1x3 there, the 20 half, 21 half, and you could slide the 2200s above it. It would be a bit of a strange one. And again, it doesn't really line up like a fly. So read into that what you will, listeners. But there are weird strikes afoot to the upside in gold, which is, again, kind of what we expected. Todd, did any of that paper come as a surprise to you, or is that kind of what you expected out here this week?
I think that's what we're expecting. If you look at a big gold chart, that 2,000 level screams out. So we haven't been there, obviously, since the middle of 2020. So we're going to need a catalyst to get up there. But certainly buying calls is a good way to protect your upside. You don't have that ultimate downside that you do in the futures. And I think at this point, buying calls before the big move, or at least prior to what we saw over the last couple of days, makes sense.
All right. And Todd, I know you're joining us on a day when the bond markets are closed, but we do have Eurodollars in our dark side movers. And I know you like to hang your hat in rates, so I think we'll head out there next.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everyone. Welcome to the world of rates. Go back to that drop down, listeners. Go one level above the metals to interest rates. Go to U.S. rates, and you'll see a whole bunch of choices. Obviously, Eurodollars at the top there, but we don't have to hang out there. There's a lot of things that light it up out there. We've been talking a little bit farther down the curve of late. That's been kind of interesting to talk about the 10-year and some things out there. So there are many different places for you to hang your hat in the rates complex these days. Mr. Todd, where should we hang our hat out there today? Obviously, Eurodollars are doing a lot of volume and they're moving, but there's other things trading out there as well. Where do you typically like to hang your hat on the yield curve these days, sir?
Well, I think the most exciting place that we've seen over the last week, even going back a little further, has got to be the long end of the Treasury curve. So let's take a look at 30-year.
All right, sir. And what's lighting up your tape out there in the 30-year this week, sir?
Well, a couple things. Obviously, the skew. When the Fed came out and announced last week that they were going to begin tapering their asset purchases, you would think that's a green light for yields to shoot higher. And actually, they did the exact opposite. There's a lot of uncertainty out there. We've seen skew in the 30-year bucket flip from puts to calls, and now it's kind of gone all over the map. Ultimately, though, they're starting to see yields go back as of yesterday higher, which makes sense, but they still have a long way to go from where they were about a month ago, and that was 30-year. Given the idea that the Fed is going to be slowing their purchases means yields should be going higher, and they did just the opposite. So we saw a bid to vol and a bid to call skew in a time when we probably should have seen a bid to put skew.
Interesting. Let's dive into that. You know, listeners, that the rates put up some numbers out there. Haven't had a chance to hang our hat this far down the yield curve in a while. The 30-year right now at about 636,000 contracts. So again, nothing to sneeze at out there on the longer term portion of the curve. And of that paper, of that 636,000, almost exactly half, 49.6% going up in the D's contract, has about 15 days to go. If you're wondering, listeners, the 30-year at about a 161 and a quarter or so coming into showtime, off about almost 2/3% on the week, a little over a point out there. Vol, longer term, we were just talking about the 10-year not too long ago on the show. That vol is at about a 4. 30-year vol, a little bit richer, which may be counterintuitive. Some folks think longer term would be more volatile, but that's what we're seeing out there. About a 9 out there, so more than double the 10-year vol out there, which up about a 1/4 point again this week. So a little bit of a lift to the vol, at least in the D's contract out there. In terms of skew, last week the puts were about 4% bid. You thought you should be a bid to the put skew there, Todd. This week the puts are about 3.4% bid. So they're still a little bit bid, but coming in a bit. And the calls last week, 2.1% cheap. This week, about 1% cheap. So some evolution in the skew, not an enormous swing out there. And I said about 50%, almost exactly, the paper going up in D's. And of that, the 165 even calls were leading the dance this week with 28,000 contracts. The big day was Monday. Looks like almost 12,000. So not quite half, but close. And then we have the rest of the week kind of even, 6,500 on Tuesday, about 6,500 on Wednesday, and almost 4,000 on the tape today. Also followed hot on its heels by the 160 puts with about 24,500, the big day with pretty much half going up on Tuesday, 12,600. Most of that opening. By the way, on the 165s, most of the paper was closing with the exception of Monday. That was biased towards opening. That was also the busiest day. So it was like net opening on the week for the 165s. 160 puts were mostly opening throughout the week as well. Again, the big day there was Tuesday, 12,600, 6,000 on Wednesday, about 4,000 on Monday. Scattered back and forth opening and closing on Wednesday and Monday there. But a lot of paper going up nonetheless. We also saw number 3 was actually the 160 puts out there in the Nove week 3 contract, looks like. That has about, that's a little bit closer to home. That's about 8 days to go. That had about 19,000 of those going up today. So a very active day today. So pretty much all of that paper, of the 21,000, 19,000 of it going up today. So a lot of action out there on the 160 puts there in the week 3 of November, which is kind of interesting. Mr. Todd, any of that paper come as a surprise to you? You mentioned you thought you might see a little bit more evolution in the skew than we saw this week. So is that kind of lining up with what you thought, sir?
It is. Puts did get cheaper for a short stint, but given the idea that there's yields are going to go higher, whether it's inflation, whether it's the Fed, whatever, I think that you're seeing reaches here, and those weekly options give you sort of a target, as opposed to having to hold it for long periods when you're talking about these quarterly options that you maybe have to hold for weeks or months. You look at a weekly option, you can target it around an event, around a piece of data coming out, a speaker, and I think that's why we're seeing some of these shorter dated put structures being put on. The idea here is that you're looking for a move at a specific date because of a specific event.
I love these weeks, listeners, where a lot of different complexes are active because it gives us a chance to kind of move around and get a nice representative sampling of everything that's lighting it up out there at CME this week. So a number 1 mover to the dark side was NatGas. So let's head out to energy next.
It's time to tap into the deep options well of black gold, Texas tea, NatGas, and more. It's time to talk energy.
All right, listeners, welcome to the world of energy out here. Scroll up in that asset class list, go all the way up to energy. It's about the third one down there or so, and you'll see a bunch of choices there. Crude oil, we're going to hang out in NatGas first. I know, Todd, on the show in the past, we talked a lot of WTI, but NatGas is kind of one of the biggest stories going out there right now. It's been extremely volatile, and again, selling off nearly 13% again this week, so that volatility still persisting out there. Is this a product complex you've been paying attention to of late, given just how much action and volatility there has been out there?
Absolutely. I mean, energy touches everything, whether it's nat gas or oil. They all seem to have a play into the bigger picture. And watching nat gas sort of come off those highs is a welcome. Living in Chicago, it's going to be a welcome event, given the fact that winter's right around the corner. But certainly that is lending to a lot of what we're seeing in WTI as well. So yes, I'm not surprised though to see some of the action here, seeing volatility bid the way it is with some of these price swings.
Are you getting a lot of interest from clients over there that maybe traditionally wouldn't play in NatGas, but perhaps they're getting tempted, getting lured to the dark side, Todd, by all this volatility out there?
Yeah, it's certainly volatility is welcome in any commodity. And when you see it stand out in one, absolutely. We have some interest. We have people watching. At this point, though, right now, I think that the move may have been made. We need to kind of wait and see where the dust settles. But clearly, NatGas has got another move somewhere baked into the cake. It's all time. It's all about time now, waiting for that move.
Well, let's see if the options are pricing in another move. Like I said, listeners, a pretty active week out there. 376,000 contracts. Not the most active NatGas week we've seen, but nothing to sneeze at out there. And of that paper, nearly half, about 45%, coming once again in the D's contract. Has about 13 days to go. So kind of right at our cutoff out there this week. Vol and Nat. Oh, by the way, before I get into that, where is NatGas trading right now? It's at a little north of 5, listeners. 5.15, off about 6.5% just this week. And of course, if you extend it back to the end of our show last week, off nearly 13%, 12.65% out there. In terms of the vol, NatGas has been hanging out in triple digits for a while, has come off that recently. It's down to about a 90 right now, 90 and a quarter. So that's actually up a little bit on the week. But again, if you go a little bit farther out the curve, we're seeing a lot of vol coming in. And of course, once you get past the madness of winter, get into spring and early summer of next year, that vol falls off a cliff. It gets cut in half. Between March and the April contracts, listeners, the vol goes from 94.5 to 51. So obviously expecting a little bit of a reduced volatility there coming into spring. But right now, the action is all D's all the time. 45% of the paper. Let's hang out there right now. Skew-wise, we're seeing the puts last week, 5.6% cheap. This week, getting cheaper, 12.4% cheap. That's kind of interesting given the fact that we have sold off pretty aggressively since this time last week. Calls last week, that's where the bid was. That's where the action was last week. 7.3% risk. They at the money this week, about 2%. So they've come in quite a bit on the call side as well. In terms of what was the most active contract, I said we're at about a 5.15 coming into the start of the segment, listeners. Looks like it was the Dees 4 1/4 puts leading the charge out there this week with about 18,000 contracts on the tape. Almost 11,000 of that going up today. So today is clearly the big day out there on the Dees 4 1/4 puts. The rest of the week, decently active, 4,000 or so on Wednesday, 2,200 on Monday. Both of those days were opening. So perhaps today's paper was opening as well. But either way, about 18,000 of the 4 1/4 puts leading the charge this week, followed by not all puts all the time. We had about 14,300 of these 6.5 calls. So looking pretty optimistic right now, but we weren't that far from those levels not too long ago. The big day for those was actually a bit of a tie. Monday and Tuesday were both about 5,500 each. Opening slightly on Monday, closing slightly on Tuesday. So maybe some back and forth paper on these 6.5s as we've bounced around from a strike perspective over the last couple of weeks, listeners. Wednesday, about 2,000. Not much today, about 1,100. Total of about 14,300 going up this week. And then the 7 calls. So if the 6.5s not perhaps optimistic enough for you, the 7s doing nearly 14,000 contracts as well this week. Once again, the big day Monday, 5,000, followed by about 4,750 on Tuesday. Again, back and forth, opening on Monday, closing on Tuesday. So maybe some back and forth vertical paper going up on both of those days. Today, pretty decent as well, about 2,600 contracts on the tape, total of a little bit shy of 14,000. Let's look really quickly, see if any other crazy strikes are on the tape this week. Out to March, which is, as I mentioned, kind of the tail end of the volatility and the bid out there for the NATGAS. The 10 calls, we're lighting it up this week pretty aggressively. About 5,300 of those on the tape. The big day today, about half of that, 2,500 going up today, 1,300, I should say, going up yesterday, 1,000 on Tuesday. Pretty much most of that opening throughout the week. So opening paper on the 10 calls this week in March. If they were buying those, that's an interesting choice because you're kind of coming right up against it there. Towards the tail end of winter, the beginning of spring. Be interesting to see if we're still seeing those lofty NatGas levels out there by that time. But someone clearly active on the 10 strike out there this week. Listen, what do you think? Were they dumping those? Were they opening to buy? Were they very optimistic? Maybe some verticals going on. There were about 4,500, the 8 calls going up this week as well. Also today, the big day for those as well. So perhaps some 8-10 verticals out there this week. What do you think? You like those better? Either way, it's a lot of upside to be putting on in March. Mr. Todd, anything catching your eye out here from a NatGas options perspective this week, sir?
Well, looking at those 4 1/4 puts, I think it's interesting because we haven't been down around the $4 level since going back to the end of the summer. So that to me seems like a pretty aggressive move. Clearly, there's good support down there, but ultimately we've seen this $5 level hold. So I think at this point, if you're a call buyer, you said that put skew started to flatten out a little bit. I think that makes sense given the fact that we're at the bottom of the recent range, exiting those puts, maybe looking to put on some calls. This might be an opportune time. You certainly know where you're wrong if we get a big push through $5. So.
Yeah, that 4 1/4 strike surprised me as well. That's why we crunch the numbers. You never know till you actually run the data, listeners, to see what is lighting it up. There's always something crazy afoot, and that usually applies to equities as well. So let's head out there next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the equities complex. You guys know where to find this. Again, go to that same drop down, hit that tab, click out of energy, and luckily, equities right below it there. Click on the equity indexes. We're going to kick things off in the Russell 2000, but of course, we explore beyond there as well. S&P, whatever else floats your boat, hit us up if you have a particular equity you'd like us to break down here on the show. Of course, we're talking equities. The other side of that coin is always volatility. Let's get the lay of the land. And, it's weird times out there from an equity volatility perspective. I was just commenting on our last show, the option block, that we do that show bi-weekly every Monday and every Thursday. And when we ran the numbers for today's show, it seemed like literally nothing had happened. All of the volatility products were literally unched maybe 0.01 from where they were on Monday. So net from Monday's show, nothing had happened. And seeing a little bit of an uptick since last week's show here from a vol perspective, but not a huge one. We're seeing RBX closing in on the mid-20 level at about a 24.40 coming into showtime, puts it up about 1.4 points. So not quite threatening the 20 handle anymore. And given the explosive moves we've seen in small caps over the past couple of weeks, that little bit of vol creeping in there makes a certain amount of sense. VIX cash coming into showtime a little bit north of the 17.5 handle. That puts it up about 1.7 points from where it was this time last week. So a little bit more upside to be found out there in VIX land. VVIX, which is the volatility of volatility, listeners, at about a 112.5. That puts it up about 8 points from where it was this time last week. Vol Q, so the at-the-money vol of the NASDAQ 100, a.k.a. the newest tradable vol product over there in CME land, at about a 19. That puts it up almost exactly 2 points from where it was this time last week. And again, NASDAQ has been moving, so no surprise there. So those vol spreads, the VIX to RBX, so the large cap to small cap volatility spread, listeners, a little bit shy of a 7, about a 6.8. That's about a third of a point tighter than it was this time last week. And again, you can tell, both of those products moving a decent amount this week, but VIX just slightly edging out RBX in terms of the movement this week, hence that spread tightening up a little bit. A VIX to vol Q, so the S&P 500 to the NASDAQ vol spread at about a 1.4, almost 1.5. That's about a third of a point wider than it was this time last week. But again, NASDAQ's outpacing S&P right now, so probably why that spread is widening out a little bit. Mr. Todd, I'm sure you're getting a lot of calls and fielding a lot of client inquiries over there in the land of equities. What's been lighting up your tape out there these days, sir?
Well, nowhere is it clear the relationship between volatility and direction than in equities. So equities go up, volatility goes down. It's the same old story. But since the Fed meeting last week, and prior to the equity sell-off a few days ago, we saw volatility starting to go higher in the VIX index, which is rare because it was on basically post-pandemic lows going into that Fed meeting. And it looked like it was going to go nowhere, but that continued to go lower. And then it started to creep up a little bit. So there maybe is a little bit of angst about perhaps, maybe, I don't want to go out on a limb here, equities might be a little over their skis, given the changes we see from the Fed, given the inflation numbers. I think at this point, equities may be starting to see a little bit of worry. I don't want to use the word fear because that's not a word that we use when we talk about equities because they always go up. But ultimately, there may be something coming here, and we're seeing that reflected in volatility. Even though it's not at through-the-roof levels, it's starting to move higher. And as you know, Mark, every marathon begins with one step. So we'll keep an eye on that equity volatility.
Yes, you got to be careful, though, Todd. You say anything even remotely questioning equity valuations these days, they're going to come for you, sir. So be careful.
That's true, they will.
Now, the crypto kids are pretty defensive, but so are a lot of those equity folks out there these days. Let's dive in and see what we're seeing out here from an equity vol perspective. Let's go out to small caps first. Like we said, the action in small caps over the last couple of weeks has been just ridiculous, I think is a technical term. Coming in this week, a little bit of a quieter week to kind of calming down a little bit. Still, it's off about 1% just since Monday. Of course, you extend it off to last week. You get a little bit more of a decrease out there at about a 24.11 right now on the small caps again. So that's off about 23 handles from where it was when it kicked off the week out there. Again, a lot of speculation has been about what's been driving all this action in small caps. Is it the fact that we're seeing names like AMC and others that are, let's say, meme friendly out there in the small cap land? Certainly seems to be driving some paper, about 30,000 contracts on the tape out there in the Russell 2000 options this week. So a pretty active week, all things considered. And let's see, right now it's, equities, most of the action is going to be in the contract going away a day or two from now, listeners. If we go a little bit farther out to a whopping 8 days, we get 20% of the paper. And that's also, actually I take it back. Let's go farther out. This is the interesting week, listeners. We can go all the way out to Dees that has 35 days to go. And that gives us a 34%. So over a third of the paper out there this week. And people are always asking us too about the smaller delta calls. we're seeing some action in that this week to the tune of the 25 halves. Like I said, we're at about a 24-11 coming into Showtime listeners. The 25 halves lighting it up to the tune of nearly 3,000 contracts. So almost 10% of the paper going up in these 25 halves this week. Most of that coming on Wednesday, 1,745. The rest kind of scattered throughout the week. That same day, we also saw the 26 halves trading about 1,000 times. So maybe a bit of a vertical there, 25 half, 26 half going up in December, even if the numbers aren't quite 1-to-1 out there, listeners. So that certainly would fall into not quite tiny delta calls, but they are smaller and they are substantially out of the money, which is where a lot of people like to play right now, not just in small caps, but also in a lot of these single names that they can't get enough of the upside on. Let's look really quickly. Also, usually far out of the money puts tend to be very active out here in all things small caps. Looks like we're once again, it was Dees as well, 2,200 puts. So interesting strikes, 25 half calls and 2,200 puts, also very active in Dees this week. The big day again was Wednesday. About 1,000 contracts on the tape Wednesday. The rest kind of scattered throughout the week. So 25 half calls and 2,200 puts. It's a pretty wide disparity in strikes there going up this week here in small caps, which again, the strikes are interesting and the month is interesting, but in terms of action to the far upside and action to the far downside, that tends to be par for the course out there in the land of Russell 2000. Todd, even people who don't watch small caps tend to be drawn to it these days because the movements have been so extreme. This week, kind of a bit of a quieter week. Have you seen more clients start to get intrigued by all things small out there, sir?
No, I think at this point we're seeing a lot of interest across the board. But again, as you sit on these all-time highs, as you sort of see any kind of pullback, it's always in the mindset of looking for that buying out opportunity, that fear of missing out that we continue to see. And at this point, I don't see any of that changing. So you're going to be watching to get an indication from vols, just maybe see, is the market anticipating a move lower? And then you may want to take a step back before you jump in with the idea that perhaps there's going to be a better buying opportunity in the days ahead.
Well, Mr. Todd, we've touched on equities, we touched on metals, we touched on energy, we touched on rates. We've had quite the journey already. But as our guest, I'll let you choose where we hang next. Where should we explore next, sir, on our TWIFO journey this week?
Well, what do we still have on the board? I think we still have cryptos on the board. Is that still up for discussion?
That is always up for discussion with our audience. So let's head out there next.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, listener, this is one of the few products that can belie its volume and still make its way onto the show week after the week. Because right now, only 170 contracts on the tape out there in the Bitcoin options. That's actually a decent increase. Like I mentioned earlier, that this product can do 20-odd contracts a week sometimes. So nearly 200, that's nothing to sneeze at, especially because it's a 5x contract, 5 coins per contract out there. So interesting stuff. If you're wondering right now, we're at about a 65, 425 coming into this segment. So we're seeing Bitcoin up about 4,050 handles, or about 6.5% just since the start of the week. And it's the 60,000 puts, what paper there is out there, 60,000 puts leading the dance out there, which is unusual. If you pay attention to cryptos at all, most of the paper, typically more than 2-to-1 in terms of OI and volume, is skewed towards the upside. It's all calls all the time out there. So seeing puts leading the dance out there in CME is somewhat surprising. Todd, there's been a lot of developments in the crypto world since the last time you and I chatted, including, of course, with the listed products over there at CME, because the launch of this BITO ETF has kind of just turned the crypto world on its head. We have tradable options now that you can put in a securities account. We have a lot more volume flocking into the futures as a result, and also driving some options paper. But what are your thoughts on the crypto landscape right now? I have to imagine this one's been just lighting up the phone over there at Ambrosino Brothers from the clients of late.
Everyone loves the crypto. And it's interesting to hear that the 60,000 puts are the trade, because when you look at crypto, the moves that it makes, obviously the volatility it was the leader on the board this week. When you see it hit these ultimate highs, Bitcoin gets to 68, 69,000 for the first time, there's typically a big pullback. So someone opportunistically may be looking for a big move back below 60,000, which, while we say it's $7,000-$8,000 move, that can happen pretty much in a day or two in cryptos before you know it. So very interesting to see those 60 puts being bought at this point, given the fact that we've seen that big move to the upside. But ultimately, you're right. It's all about calls. It's all about upside. It's all about how high can this go? Because the whisper talk certainly is that this is still in the beginning stages of a much higher price level, given what we're seeing from a macro perspective, whether it be the dollar, the Fed, or just the general open interest that we're seeing, general interest from investors.
Have your clients been calling up and diving into this BITO product, sir? What are your thoughts on that one?
I think it's another way to give the people what they want, and that's access to this. Whether it be at a lower level cost, whether it be at a higher liquid product. We saw the same when we went from S&Ps to minis. I think it's a great idea. As more people involved, the better the product becomes, the more efficient the product becomes.
Well, it's hard to argue with the access argument, because that certainly does open the doors to a lot of people out there who've wanted to play in crypto for some time. We've talked about this on our Crypto Rundown show for years now, but they had few options, pun intended, when it came to products they could trade in their traditional securities account that also gave them exposure to all things Bitcoin. Of course, for a lot of people, these futures are just too big over there at CME, or maybe they're still intimidated by the size of it. They're enormous. And so that's always been a bit of a roadblock for a lot of the retail out there. So having this product now that trades pretty actively, the listed options on it in the span of a couple of days out there, not even. So big, fast turnaround for the BITO options. They're doing decent paper, about 61,000 contracts ADV last I checked out there. So pretty active contract. So for everyone out there who wants some exposure, we had a good conversation with the ProShares folks on our Crypto Rundown on Tuesday. Check it out if you missed it, listeners. We dive into all the nuances of the product, why they set it up this way, why they go with the futures versus the spot. What are their thoughts on the position limits? How will they impact the product going forward? What are their thoughts on the actual roll yield impact? A lot of great stuff. So all the questions you may have, we put it right to the source there. So check out the Crypto Rundown after you're finished listening to this program. But we're not finished yet, listeners. We have a few more complexes to check out. We got a ton of ags burning up our movers and shakers this week, so we have to head out there next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, we got a lot of ags lighting up this week. We had rough rice, we had SRW wheat, KC wheat, we had lumber, which is technically in the ags. It's a soft. And we also have lean hogs, which technically falls in that category as well, in the livestock. So the ag subcategories lighting it up out there this week. We're going to head out to the wheat, just because we don't get the chance to talk about wheat that often. And of the two, we got to look at the good old SRW wheat. That's done about 160,000 contracts on the tape. Again, only about 20,000, not even, on the KC wheat. So we're going to head out there again, go to the drop down, go to ags. That's the top of the list. It is an alphanumeric list. After all, this is alphabetical order list. Grains and oil seeds at the top of the list there in the product family. Go down 2 slots to the SRW wheat. You'll find where we're hanging out right now. Coming into showtime at about an 813.75. That's up about 47 points this week, or about 6.2% just this week. So a nice rally this week, and obviously extending that back out to last week's show, it's up about 5%. So a big move out there in the wheat. And as we expect, wheat and the ags usually tend to line up, not quite the equities where everything goes up in the weeklies. It's more on the monthlies, usually around D's and other times of year. And that's exactly what we're seeing right now, the D's contract, which happens to almost be a weekly itself, 15 days to go. That's where 62% of that 160,000 contracts went up this week. If you're wondering what is the vol out here in wheat, it's kind of reminiscent of small caps at about a 24.10 right now, off nearly 1.5 points this week. In terms of the skew, we've seen a huge evolution in the put skew this week in the wheat. Wow, that's big. The puts last week were 17.7% cheap, nearly 18% cheap to the at the money level. So a huge discount to the puts. This week, a little bit shy of 4%, 3.8%. So the puts have come back to almost in line with the at the money. That's a big swing in the put skew out there. I don't see that too often in the ags. That's interesting. The calls last week, 6% rich. This week, 2.4% rich. So both wings have kind of come in, but the puts very dramatically. So let's see what's trading out there. Maybe that'll give us some insight. The most active contract out here this week was the D's 850s, actually. So it wasn't the call wing. It wasn't the put wing. Doing 11,000 and change. The most active day, I should say, was today. Nearly 4,000 on the tape today. 3,500 on Wednesday. 3,000 on Monday. and a handful on Tuesday. Most of that closing throughout the week, so maybe some folks getting the heck out of Dodge. Like I said, we're at about nearly an 8:14 coming into showtime, so the 8.5 strike, 8:50 strike is substantially out of the money. You can see why some folks may be closing on that this week. Then we go to number 2. It's the 800 calls with about 8,700 of those. The big day yesterday, 3,500. Almost 3,000 on Tuesday, 1,000 on Monday. Most of those days closing as well. You got to go all the way down to, looks like number 4 to find their first real put on the list. It's the 770 puts doing about 4,200 contract. That's surprising. Given that huge move in the skew, I thought maybe there would be more put activity afoot here. About 4,200 contracts. The big day was yesterday, 2,300. So a little more than half going up yesterday, about 1,200 on Monday. The rest kind of scattered throughout the week. That was opening on Wednesday, though. So maybe some opening put buying on these 770s. That's what drove up this skew. Either way, a big move, like I said, in the skew, even though we're not seeing a ton of commensurate DEES volume to explain it. So interesting stuff here. Let's go a little bit farther out really quickly. Yeah, most of the paper is centered around the DEES contract. I know, Ty, you're not a huge ag guy. You must spend most of your time out there in the rates and a lot of these other complexes that are burning it up these days. But I have to imagine every once in a while your phone rings on the ags front. Anything catching your eye out there these days, sir?
Well, I think that when you talk about maybe seeing a flip from put skew to call skew, given the fact that we're not seeing any put buying, suggests that a lot of call selling in there would do the same thing. It's a linear relationship. One doesn't move without the other. So I think at this point, seeing the ascension in wheat prices and maybe some call selling is lending itself to up into the put skew. But right now, we're just watching. This is the inflation that maybe many watching are fearing bleeding into other markets, and you're seeing it right here with your own 2 eyes, watching wheat, rally to levels not seen in 7-8 years. On the fact that, yes, there is real inflation out there, and it's not just what we're seeing in CPI. We're seeing it in real terms here when you see these food prices moving higher.
But Todd, the Fed says it's all transitory. We should pay no attention to the man behind the curtain, sir.
Yeah. Says the man holding a match with a house brand behind him, saying, "How did that happen?" I think at this point, the Fed is still trying to talk its position, as opposed to the markets telling you it's time to start getting a little bit more married to reality. So at this point, these types of moves in the ags, these types of moves in some of the other leans, I think that this is really what's showing us where real inflation is going to be coming from. Not necessarily when you have to pay a few more bucks for that TV or that Xbox, but when you get down to the roots, you get down to some of the core essentials, food is always going to lead the charge.
Yeah, maybe a reason why that new nomination still is a little bit up in the air out there. A little bit of back and forth on inflation views. But, we could talk the Fed forever. It's time for you guys to join us here on the show. It is time for your Futures Options Feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/the Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody. Let's get to some of your feedback really quickly. Let's pay off the poll we mentioned on the show last week. We had a Halloween-inspired poll last week. We asked you folks, what do you think is the most terrifying options strategy out there? We gave you 4 choices. Gave you straddles, iron condors, time spreads, and the old chestnut of conversions reversals. Just to throw in a different one there. Time spreads won, as I expected, nearly 47% of the vote, followed by number 2, iron condors. I think it's just the name that intimidates people. 31.9%. Straddles, number 3, 14.9%. And bringing up the rear, probably because most of you have no idea what they are, conversions and reversals out there. We have a fun poll out there as well. A lot of you playing along. It's Tesla time, listeners. What's the biggest options position in Tesla? Don't cheat. We gave you 4 choices. Go see if you can pick the winner. Winner, chicken dinner for you. It's a fun one. lot of you guys having fun over there. At Options is the place to go to make your voice heard. Let's go out here to some of our listeners. Let's go to Alan, one of our secret club members. He says, hey, CME has launched many micro products, but are there any plans from CME Group to launch something similar to the nanos with a very small or even one multiplier? Oh, the nanos. Well, another hot product we had a chance to chat about. Check it out. We had the folks behind the nanos there on our interview show on Tuesdays. We gave you guys access to some hot products this week. The ProShares guys on Monday. We had the folks behind the nanos there on Tuesday answering all of your questions. If you're not familiar with the nanos, listeners, they're not live yet. They're proposed for next year. These are going to be on the S&P 500, and they're going to be one multiplier. So effectively no multiplier. One contract, one share of the underlying. Most standard equity options are for 100 shares out there. So it's a very interesting product category, for a lot of these smaller accounts we've seen come online over the last year and a half. There certainly is an argument to be made for some smaller size contracts. Whether 1-to-1 is the right ratio, that's up for debate, certainly. I guess we'll see when they go live. Are there plans from CME? I have not heard anything. We've had CME folks on the show many times. I do believe Tim McCourt is coming up again soon. He's the equity guy there, so he would be the one to know. I shall put your question to him, Alan. But I as you mentioned, they've launched a lot of micros that are all smaller sizes. Usually they get down to around 10. We have not seen any 1-to-1 contracts. I don't expect we're going to see any anytime soon. But again, if these nanos become the hit of the business, one thing we know about the options and derivatives world, it is very much a Me Too business. So if something succeeds, others will follow suit. So I think a lot of people are going to play the wait and see game there for these new nanos coming up. Todd, have you heard about these effectively no multiplier index options, and what are your thoughts on them, sir?
Well, the CME is always trying to come up with new products. They want to reach this retail investment community, which really exploded during the pandemic when everyone was sitting at home staring at their screens. They got into options trading, and you see that in some of the option volumes that are published. This is a great way to get to it. It's accessibility. How can we get this product in front of new people? Cost is usually the number one barrier, and this will probably get more people involved. And again, more people equals more efficiency. It may take time to get the kinks out, but certainly that's my experience.
All right, we got a similar question here. Back out to the crypto front for T-Mez. T-Mez says, can we expect a ProShares ETH ETF next? I asked them that exact question there, T-Mez. You can listen to their answer verbatim on the show, listeners. But of course, they're not going to comment on new products. You hope you can maybe squeeze a nugget or two out of them. And they were kind of coy on that front. Of course, we have seen since all this madness unfolded with the ProShares, we have seen CME announce a mini ETH contract coming. I believe it's on December 6th. So coming up in a few weeks now. Hard to believe December, only a few weeks away, but that's where we stand, listeners. And that'll be interesting to see if that might gin up a little bit more retail action out there in the ETH product, which kind of suffers from the same thing the Bitcoin had for a long time, which was it was just too big for a lot of people out there. So ETH, I know ETH very popular. Talking to a lot of you on our crypto show, ETH is kind of where a lot of you hang your hats in the crypto space. Bitcoin gets all the headlines, but a lot of you like to play in ETH. So a smaller micro-sized contract for that will certainly be interesting. Whether that will translate into a Bitcoin, or I should say a ProShares ETH, I don't think we're there yet from a volume perspective. Remember, the Bitcoin futures, we've seen days with them, even though they're as big as they are, 20+ thousand up to like 30-odd thousand some days out there in the Bitcoin futures. So they were doing decent size, not so much lately, but they have been proven capable of that in the past. But look how much size they needed for the ProShares. They already hit position limits or they're very close to them, just with the first couple of weeks. So you need a lot of size and liquidity available in these products before you can launch something like that. I don't think, given the numbers we're seeing, ETH's doing somewhere around 4,000 contracts a day, I think. So not quite there yet on the ETH front, but hey, if it continues to take off, and maybe if these minis can kick off a next wave of trading out there, it could be something that's on the horizon, that's for sure. Todd, what are your thoughts here on a ProShares ETH ETF coming next, sir?
It's only a matter of time. It's what the people want. It's what the people will get. And I think that is, maybe it isn't going to be here tomorrow, but it will be here. Again, it's getting the products in front of the people that want to trade them, and that will happen given the popularity that we've seen.
All right, listeners, that music means that's all we've seen for this week's show. I love these shows where we get to really touch on a wide variety of different products. People are always hitting us up, talk about this complex, talk about that product. We can't obviously get them all onto the show. It'd be a 5-hour show. But it's nice when we can kind of do a representative sampling this week, and we certainly had a chance to do that this week. That said, if there's a particular product that is lighting up your tape or intriguing you, you want to know more about it, think it should be featured on the show, hit us up. Let us know. You know where to find us. At Options, most of the major social media. Questions at theoptionsinsider.com also works to get to us out there. Of course, if you join the Pro, you can ask us live there in the Pro chat. Love seeing all the folks out there. And before we go, Mr. Todd, if folks are intrigued, they want to check out what you and the team are up to over there at Ambrosino Brothers, where should they go? What should they do?
I can be reached on Bloomberg. I'm also at TJC1539. That's my Twitter handle. It should be a very exciting couple of months. Stocks, oil, cryptos on their highs, Fed policy getting ready to change. A lot happening out there.
Hot times indeed. Check him out, Ambrosino Brothers. Like I said, as you mentioned, he's on Twitter at TJC1539. A bit of a mouthful handle there, Todd. But we'll get folks to you. Don't worry. TJC1539 on the old Twitters. You know where to go to find everything small caps over there these days, including the impact of COVID. Spoiler alert, it's pretty big. All the volume, the volatility, all the stuff we're talking about on the show every week. FTSERussell.com is the place to go. Give them a follow while you're at it on the old Twitter at FTSE Russell, at FTSERussell.com. 2 S's and 2 L's. It's a place to go for all the insight on all this crazy small cap action we're seeing out there. But if you like the meme stuff, you're going to want to check out the small caps. Check them out. FTSERussell.com is the place to go. And of course, CMEGroup.com/TWIFO or /TWIO will get you to all the reports you need for all these products throughout the week, not just when we're talking here on the show. And we'll see you back here tomorrow, noon Central, 1 p.m. Eastern for volatility views. And right after that, 2 p.m. Central, 3 p.m. Eastern for options oddities for all of our secret club members. Then back again next week, all the way to Thursday, another episode of This Week in Futures Options. We'll see you then.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. StockTwits.com/options, Facebook.com/TheOptionsInsider, or via questions@TheOptionsInsider.com.